Hello, everybody. Welcome to another episode of Web3 Economics, where we discuss Web3 economics. Surprise, surprise. And today we're going to have a discussion about tokenizing real-world assets. And I will be joined by Samuel and Edwin. We actually started this discussion in our private Telegram channel where we discuss token economics. And we decided that this subject is so interesting that we would actually record the session about this. And by the way, if you want to have access to this private Telegram group, reach out to me. I'm going to send you an invite. I think we can start by a round of introductions. So, Samuel, why don't you go first, please? Tell us about yourself, what you've been up to, and what are you focusing right now?
Okay, thank you very much. Thank you for having me today. Well, my name is Samuel Christensen, and I've been doing a lot of projects, and most of them brought me here where I am today with TerraRock. One of the projects that I started recently since last year has been around construction and real estate. I've been a retail investor since 2015, more or less. So financial markets has always been kind of my thing. Most of my knowledge comes from there, researching and learning as much as possible in terms of investments and risk management. And for the past 2 years, I kind of went to a rabbit hole regarding blockchain and crypto, where I was approached by a friend regarding Cardano and blockchain, and since then it's been crazy because I definitely dived into blockchain and Cardano. And with that, I even took it one step further, and I took a Cardano developer course with Immorgo, the commercial arm of Cardano.
Well, give us an elevator pitch. What's TerraRock?
TerraRock is a decentralized investment platform that aims to make investing in real estate as much accessible to everyone as possible. It's an investment tool for people to invest in real estate where they can have control over the assets and over their tokens through a DAO structure. It's a decentralized, community-driven trust that we can use it to invest in real estate.
Excellent. You picked the most difficult subject to solve on the blockchain property.
Yeah, I think so. It's been a challenge. I can tell you
that. Edwin, over to you.
Yeah, I agree on the most difficult one. Jesus, this is kind of like if you're a madman entering into crypto and then you go into securities and RWA, that's like madman times 10. So been in the space since 2016, 17. I was I'm still mergers and acquisition lawyer who pivoted into tech. Landed into the whole space of blockchain, just trying to understand smart contracts. But it was more from a legal point of view to understand if you could automate certain things. I was playing with sovereign identity. 2016 with a company that I used to be the head of legal. And then 2020 decided to create my own startup, which is Brickken. And basically what we do is we want companies to focus on the USP. So whatever they do, they shouldn't focus on the technology as to how they can tokenize. So we started seeing in the space that there were companies trying to tokenize and still have a business model. So it's kind of like you have divergence as to how you can proceed with tokenization. So we wanted to give the approach as to how we can transform ourselves as a Shopify kind of version. So we allow companies for them to focus on their everyday, their business model without having to develop tech for them to be able to tokenize. So we give them all the tools and functionalities for them to jump into the tokenization space wherever they want in any jurisdictions, as we're agnostic on the asset and agnostic on the framework. And without a doubt, this space is super hard just because there's securities. There's a lot of misinformation as to what happens when you hit private markets or public markets. Everything is a bit messy, but it's a lot of fun trying to build and renovate the whole financial markets and security markets, of course. So yeah, challenge accepted. Why not?
Excellent. And just to clarify for everybody, my understanding is that Brickken only focuses on the tech side of things.
Absolutely.
So you're not going to provide any legal advice, or you're not going to do any compliance with people. You have partners that you're working with, right?
Yes, we do give some tools for the compliance, so KYCs, KYB, KYT, some things regarding money laundering, because that's very much throughout. We do help in various things as to how subscription agreements work and all of that, because that can be takeable, let's say. But kind of like the layer of service, we created a marketplace where partners can jump in and they can offer their service to the tokenizer, and the tokenizer, if they need some legal, they go to law firms or marketing agencies or financial advisors. So they grab our tech, and the service layer, they have already a curated list. So hoping that through this method, we can really ease the burden as to how to tokenize, because the first question is like tokenization. Yes, digitization of real world asset. Like that's so, there's nothing there. Like that's just wording, kind of like the whole thing that you have to do in the back. That's the real work, and that's why a lot of people just get scared, and this is why it's so difficult, because once you start going in and all the things that you need, too many moving pieces, and there's a lot of know-how that you need and very moving parts. So for Brickken, we focus on the tech, and we let the service layer be done by somebody else who's an expert in that field.
Great stuff. Briefly about me, I am an economist. I have a master's degree in managerial economics. I have background in project finance. So that was before 2017. And in 2017, I stumbled upon Ethereum and smart contracts and was pretty much fascinated by the idea of creating tokens and creating socioeconomic incentives. I currently offer my advice and expertise as a service, as a fractional virtual chief token economist. I'm also a co-founder of a DeFi DAO, and 3A DAO is an organization that is developing and operating a zero-interest lending protocol that's completely decentralized and non-custodial. And also, we are launching a token that's going to be soft pegged to the euro. Since 2017, I have advised over 20 Web3 projects and also enterprises, and I worked mainly on designing token economics, but also on auditing and validating existing designs. So, and I'm also a registered service provider on the Brickken marketplace. So if anybody needs advice with token economics of the tokenization project, then yeah, you can find it
definitely
over there. Okay, so the agenda for today for us is to cover the 3 C's of real-world assets tokenization. So it's custody, claim, and control. And then we're gonna let you guys speak how you are thinking about solving those 3 C's specifically within the realm of your project. And if there's still some time, we might have some freestyle discussion. So I'm maybe going to kick it off by saying that this 3C custody, claim, and control, I invented this, so I'm going to take full credit if it's going to catch on. But if you hate it, then yeah, I'm the one to blame. I just wanted to come up with a framework of even beginning to think about tokenizing real-world assets. And Edwin, as you mentioned a moment ago, this is such a broad area. It's almost like 20 years ago, somebody saying, oh, let's put our business on the internet. I mean, what does it even mean? So in order to have any token that actually can have value and it can be meaningful in terms of anchoring this value to some real-world assets. And by the way, by real-world assets, I mean everything that is not natively on-chain. So if we have Ethereum, that is a native on-chain asset, it lives on Ethereum. Custody is very simple for Ethereum because whoever holds the token in their wallet have full custody of Ethereum. Claim is basically I can pay gas fees in Ethereum, or I can run an Ethereum node. And control is also very easy. If I hold Ethereum in my wallet, I have full control over it, and that's pretty much it. And also control can be executed through smart contracts. But when we are talking about real world assets that are outside of blockchain, the question is who has custody over this particular asset? Like who the asset in their possession? And the claim question is, if I'm a holder of this token, what rights does it give me? If I have the token, can I redeem it for the underlying asset? If I have the token, do I participate in some sort of revenue sharing? And finally, control. The question is, if I have the token, what is the control over the asset that I can execute? So how easy or difficult it is for me to execute this claim? Do I have to go to court? And if I go to court, what the court is going to say or do? Whether the court even going to acknowledge that I have any sort of claim, and then I can do anything about it. So this is the framework that I think can be useful when thinking about all of this, but I would love to hear your opinions about this.
Absolutely. Sam, you want to start?
So in many ways, I would start with the endpoint control and how you're able to claim it. So TerraRock, our goal, our strategy goes into setting up TerraRock as a trust. And for the aspect of control, we're going to design the trust charter. So whoever is a token holder of TerraRock is going to be a trustee. And as a trustee, you have control over all the assets represented by that token. And at the same time, you also, by being a token holder, you also nominated as beneficiary. So that's one of the main steps of why our approach goes into a trust structure, because we are able to implement those two very important control aspects into the token. So every token holder is a trustee and at the same time is a beneficiary. And by being a beneficiary can reap the rewards from whatever revenue is generated from those, in this case, real world assets. And as a trustee, you have control over those assets. You can decide what to do with those assets, if you want to sell them, if you don't want to sell them, how you want to manage. And that goes in line with the DAO structure. As a trustee, you have voting power and you can decide where you want to go with the project. And your decision is in line with regulation and compliance, because as a trustee, you have that power over all the assets belonging to the trust.
So I have so many questions about this. Was the specific jurisdiction where you want to register those trusts?
We want to start in terms of strategy, go to market, it will be US market. So that would be the first market that we're planning to address. Exactly because of that. Based on my research, I came to the conclusion that the US market in terms of a trust structure is the one for now in terms of regulation is more in line with this solution we're trying to put together based on the regulation that's already in place. So we're not trying to figure out ways to circumvent the regulation. My approach was trying to find a regulation that we can adapt to blockchain and the concept of tokenization. And then I came across the trust structure. That's where I found the solution, and US would be the starting point based on the regulation that's already in place.
Okay. So how are you going to make this token claim enforceable?
Because the design of the trust, pretty much the charter of the trust will decide what's going to be and how it's going to be and what you can claim. And by holding the token, you pretty much are nominated as a trustee. So whoever interacts with the TerraRock protocol and has tokens is automatically nominated as a trustee. And based on that, you as a trustee can legally enforce whatever rights, in this case, you have over the assets. And those are protected and covered by regulation and law.
So you're saying there will be a charter of the trust, and if I want to execute my rights as the token holder and there is anything wrong with that, I go to court, and then the court will enforce based on
the existing
charter.
law. Exactly.
And does there need to be any KYC process, or are there any other requirements?
We're still lining some strategy for that answer for two reasons. One, if we go with a regular trust, yeah, we're probably going to need QIC, but we can go with as a private trust. It's a bit more complex, but we can go as a private trust, and that way the privacy of the token holders, it's completely anonymous. There are some states in US we can kind of go deep in the privacy aspects, and in certain states we don't even need to do QIC. We'll be a registered agent or attorney, and that attorney works as based on the procurement, and based on that he does all the legal work, and the trustee is completely anonymous. So only the attorney will have access to QIC data, for example.
Okay. So the attorney is on the hook for money laundering and stuff like that.
Exactly.
Okay.
Yeah, because it needs to be compliant. So in that way, token holders are anonymous, like pretty much blockchain, but there's a link, there's a bridge. In this case would be attorney responsible for the trust in terms of compliance. And the attorney is the one responsible for QIC if needed and go through all the regulations.
Do you know from the SEC standpoint, are those tokens going to be securities?
That's what we're trying to solve, and not to be a security. So one of the efforts of TerraRock is exactly pointing to develop utility to actually not to be a security and to be a commodity in this case. So with that, we're bringing some products to the protocol, and that we focus on utility. And one of them is to allow token holders to have real access to the assets, as, for example, asset manager. So if you hold a certain amount of tokens, you can apply through the DAO structure. You can apply, and I want to manage this and that asset, and you can use your token holding as a card member, and that way you will actually manage those real world assets. So that way we're going to bring utility as much as possible. There's other strategy we're trying to put in place and understand to see if it's compliant or not. And based on the commodity regulation, that's where we want to go in terms of design of TerraRock, is to find ways based on the regulation we have right now in place and figure out solutions around blockchain.
Do you have any comments or questions on that?
Not at all. Actually, I mean, in the end, there's different approaches. What I liked about this space and securitization is there's just not one clean standard, because there has never been. Like, there's various ways. For example, you want to go public without shares, you can create an SPV that you put into the market. I mean, that's a crazy solution, but 2 years ago, everybody was doing it. So I'm not saying it's wrong or right or negative. Actually, it's just another way. And it's good that everybody brings their know-how as to try to bring a new opportunity and possibility, because it seems sometimes that in tokenization, there's only one right way. And that's like absolutely insane, because there's no one right way to hit a private market or one right way to go into public markets. So I think people need to stop with that kind of like, I'm doing it via NFTs because NFT is like, yeah, but there's not a single law out there that says you need an ERC 721 to tokenize. So what I like about that is just that this approach, I've never heard it, but it's a great thing because I've never heard it. I'm going to study because I'm not expert in that area or trust or anything. I've been reading since we had our last conversation. It's quite interesting. It could be a potential solution.
Samuel, to maybe summarize what you said using the 3C approach. I understand that the custody of any potential real-world asset is with the trust itself, and then the control is executed by the token holders who are also the beneficiary and members of the trust, and the claim is actually defined by the charter of the trust. Would that be correct?
Exactly. In this case, the trust is going to be the owner of the assets, and trustees, they're going to control those assets. But all assets belong to the trust. That's what we envision, and that's what we're developing.
Edwin, over to you. So how do you see Brickken solving the 3C, or maybe how is it relevant in solving the 3C?
So since we're a mere tech provider, right now we do self-custody. So any company who wants to tokenize, they do it through their own private wallet or whatever they decide. And then from the investment side, it's also the same. So what is funny here is there are no intermediaries. So we're not looking into like how public markets work, where you have a broker who's in the positioning and whatnot. It's literally the company tokenizing its equity or debt and put it in the hands of investors. Yes, there's different applications. It's not the same doing that in the United States versus doing that in Europe. But it sometimes can even be a private market. For example, I am a company and a startup and I have 10 shareholders. I tokenize my equity and send it to them. I'm not even hitting the public markets for the prerogative that it is a public market. So it is interesting to understand that just because you embed something on chain, you don't make it public. The information is public, but maybe the issuance and how it is transmitted to third parties does not fall into a public issuance. It depends on jurisdictions, as I was saying. But that's kind of like one of the biggest mistakes that I've seen, that everything you put on chain becomes public and it goes into the SEC. For example, in Europe, if you tokenize certain types of companies, they can never be considered security just because there's something else. They're a limited liability company, which is owned by people with a name, which you obviously have a KYC to, and that way it's a private market, the one you generated. So there's a lot of things. Why I'm doing this with the custodian is we allow them to do their own self-custody because we don't know how they're going to use our tech. They can go private or public. But since we're starting to generate institutional interest, we are in talks with different custodians with like a certain grade of compliance, or they are registered in a specifically jurisdiction and bank. For example, here in Europe, you have virtual asset service providers. So if you're a custodian, you need to be registered with a corresponding central bank. Here in Spain is the Bank of Spain. So we're in talks with one of them, but we're also in talks with a company out of Lithuania who just got acquired by Binance, who only have custodian grade for institutions. So in the end, it's kind of like our approach is we start understanding the needs of the market and we start integrating. And like, I'm never going to be a custodian because that would put a heavy burden from a regulatory point of view, but does not mean I cannot hook up to a custody grade offering that somebody else already developed and it's what they do as a unique selling point. And that way I integrate, and the client who wants to do self-custody, they can't, but if they want to go to a higher level, they go for that custodian. That's how we're solving the first C. It's, again, do it yourself. The second one was claim. We develop our own smart contracts from scratch. So, for example, we have an escrow account. So if an issuer says, I need, I don't know, 100K, and I want to put as a 20K soft cap, the minimum threshold for the investment to occur. The escrow, all the investors put their money into the escrow, and then when it reaches 20K, the issuer can go and claim, and the investors can go and claim. But that's kind of like the threshold. If the 20K as a soft cap is not performed and it leaves at 10K, then they all go back and claim their own investment or the issuance. So in the end, we're putting kind of like intermediaries, which are not entities themselves, but the technology itself. So we're trying to protect the issuer complying with what they want and request, and they have to do all these things. And then the investor as well, so they know that there's a minimum guarantee for the project to prosper. And that's how we're doing. So it's, again, a self-claim because there's not a distribution methodology. It's always done through escrows based on parameters that need to be fulfilled for the escrow to execute. We got this from bank. When I was an M&A lawyer, I used to do a lot of escrow deposits. And the bank was saying, hey, as soon as this occurs, I'll leave the money to the buyer or whatever the format was. You know, kind of like it was just full of parameters. So what we're doing now is parameters for money. It's always A and B, which is codable. So we create these escrows that are automatic entities, and based on the fulfilling of parameters, they deploy or they cancel the whatever they were set out to do.
So now when we're talking about the claim, this is only in the issuance process. This is claim of people who put their money and also claim of investors of the deposits. But the claim that the token gives the holders, this is something that the company defines or whoever is the issuer, right?
Yeah. So the issuer defines the token supply, the token economy, everything. So that's kind of like the creation of the digital asset. And then the interaction with the investors is always done through escrow, being for obtaining money, but also for distribution of dividends or interest, depending. So if you want to distribute earnings, you use another escrow, and then that allows the investors to go and claim. So again, the issue is not interacting directly. It is already put it into that deposit because we can measure different things. Because if you want to do a transaction, sometimes that it's manual, kind of like sending it to the wallet, you can make mistakes. You can say like, oh, I messed up with this like person. They shouldn't have received that many because they had less tokens than the other one. So by us using escrow, kind of like the issuer on the claiming of earnings, the issuer deposits, I don't know, 1,000K and has to distribute in all investors. It automatically weights in the average of every single investor in their position. And when an investor goes and claim, since it's measuring its weight on the token, they claim what is corresponding to them. So we help a lot of automatizations that need to happen for the issuer not to fall into mistakes, because we know that in blockchain is not as simple as the centralized entity where you can go and say like, hey, I send money wrong to here. Can you please rebate that transaction? So here with the escrow, with the entity that we create on chain, we kind of want to protect against errors, because also in Brickken we've made those errors, and I made those errors, and we've been in the space for a long time. So we want to help them, especially the new onboarding of Web2, to not have that kind of like risk. Because if I remember my first transaction I did from a MetaMask to another MetaMask, I was like shaking. I was like, this is too much. Like, what is happening? You know?
Yes, yeah, and especially there's no undo button and there's no customer service. Yeah, you send it to the wrong address, it's gone.
So imagine now you tell a company that every transaction it's done, kind of like there's no back. So we do, again, just a tech provider, really want to fulfill that role where we just say, company, this is how it works, and very simple, and then for them to understand that there's certain protection, but obviously it's not 100%. So we'll get there. So that's kind of like what we do on the claim.
Excellent. So this escrow mechanism and the distribution of different dividends or any other benefits, this would dramatically improve any crowdfunding.
Absolutely.
Because now you can have a crowdfunding project that you can participate with as little as, I don't know, $1 even, and it still doesn't matter for the overheads of the project. So for the project, having 10 people that each deposit 100K is equally valuable as 1 million people that everybody deposits $1.
Yeah, I agree. I mean, in the end, what we're doing in the space is kind of like doing that decentralized factor, no? So crowdfunding still centralized. If there you still belong to a database, you still belong to an intermediary, the real connection between you and your investor is not really truly made. There's a lot of obstacles. And also a lot of the efficiency factor. You still belong to kind of like that entity who tells you if you can, when you can, or not. At least with Web3, you can really pursue your own kind of like crowdfunding method if you already have like that outreach or that kind of like, again, private market. So it's kind of like we go from investments happening at the mass level, from entity to intermediary to investor to entity directly to investor. And obviously, fees are dropped huge because crowdfunding, they make a big uptake on everything that you get funded, which is fine. They give you the machinery, sometimes the connection of investors. But it's also important to understand that they never go for 100% ratio. They don't promise that. They do their best. They say, maybe they like your project, they push more. It's a business, right? And as a business, they always take what they think is best. So it's kind of like maybe they accept you, but they're like, I don't know, they're going to raise, but let's just take out money from them. But here you can always go directly to the market and say, like, you know what, I think I'm a solid project. I already have maybe interest or community or clients who might want to be able to invest. And I go and connect directly to them. Kind of like, that's kind of like crowdfunding Web 3.0, which is not even crowdfunding, which is literally what used to happen years ago, which was a company looking for funds, walking around and asking people for it. Kind of like ads, kind of like we went back to a pure relationship where there's not a middleman. We got used to the middleman because there was a lot of processes that could only be performed by the middleman, and now we're like blocking those tools or adopting those tools and functionalities and bringing them to the issue themselves. It's like, you don't need a middleman anymore. Here you go for it.
Excellent. Guys, do you want to mention anything else that we haven't covered yet?
My main focus is, in terms of TerraRock, is the transparency and the legal aspect that is going to be protected. And that's what I'm trying to reach, because I think that's where the biggest gap it's out there in the market right now, is bridging whatever we write in code into real life interactions, what's happening offline, off chain. So that's the problem that I think we face the most, is not having a solution that whatever's happening off chain sometimes is not related to what's happening on chain. I'm not talking about smart contracts running off chain. I'm talking about the real world assets and the bridge between those two spheres. And that's what I'm kind of trying to solve.
The control aspect of it. How do you
Exactly.
enforce any on-chain actions into the real world? That's an expensive problem to have, and probably a lot of money to be made when you solve it. Well, thank you very much for joining me today, for participating, sharing very interesting insights about your project. Anybody else who's watching it, if you want to discuss your project or if you have your token economic questions, then please reach out to me. Or if you need a trusted token economist, also feel free to give me a shout. If you need technology for your tokenization project, you need to reach out to Edwin. And if you are interested in using the trust structure, then Samuel is your best person to talk to. So thanks a lot.
Thank you very much. Amazing.
Thank you very much.